Welcome everyone. We're going to go ahead and get started. I wanted to thank everyone for joining iShade today for this webinar and Ask the Expert session, Staying Relevant with the Changing Accountancy World, presented by Peter M. Vesness. With over 30 years experience in the financial industry, Peter is the CEO and founder of Prophecy Incorporated, a financial software service for financial professionals, CPAs, and pro advisors. Prophecy is an all-in-one financial analysis and budgeting software from seasoned financial experts. Prophecy helps business owners and financial advisors alike gain powerful insights to manage cash flow, grow profitability, and increase valuation. Immediately following today's webinar, Peter will be answering questions on iShade's online Ask the Expert Q&A platform, which is easy to access. All you need is your iShade login. I'll give a quick demonstration at the end of today's presentation on how you can hop on and ask all of your questions. Peter, thanks for joining iShade today. I'm looking forward to today's topic.
Excellent, thank you. Well, it's good to be with everyone again. I think I was out last month, but I was over in the UK, and very, very interesting things seem to be happening at a much faster pace than one could imagine, which is why we decided we wanted to just talk about staying relevant with the changing accountancy world. When you look at what services accountants provide beyond tax and audit, the business owners are expecting you to let them know the nuances of what goes on financially. And of course, the basis of all of this is historical financial data. It's critically important to accounting. That's why we have key performance indicators. And whether it's a micro business where maybe just cash flow and cash reserves and seasonality are important, or whether it's a mid-sized firm where there might be multiple profit centers and ways of managing capacity and inventory, just-in-time elements, all those things become really, really important. Now, what's obviously very, very interesting is that the KPIs and the historical financial data really form baselines for all businesses. The reason that people look at doing benchmarking is they'll take an industry sector. And last week we watched a demo of a global software company that works specifically for contractors and trades. So whether it was a small company that did plumbing or whether it was someone that did commercial building, they had built an incredibly comprehensive cloud-based system that integrated full project management. And everyone carried around an iPad or a tablet. It monitored the actual drive times to the locations. It managed the raw materials and supplies. It managed the hours of the labor. It tracked the labor against the bid. It showed profitability. It was very, very, very slick. They've been around since 2001, and they were just entering into some strategic relationships with Xero accounting. Xero introduced us to them, but had been working on QuickBooks for a while. So it was fascinating to see the level at which cloud technology had gotten to for helping build, efficiency in terms of financial management into a very specific vertical sector. So it's really important that the accounting industry understands that their business clients have a belief about them that you understand the financials, that it's not just tax and audit. So obviously, historical financial data is very, very important to that. So my general recommendation is, if you have business clients and you're in any particular size company or sector, it's really important to understand what are appropriate key performance indicators and how to essentially know how to monitor, or how at least your clients should monitor what's going on financially. Again, this goes to the hidden language that we all use as accountants. The P&L statement does not show all the cash transactions. The balance sheet shows cash transactions but hides them because of their category within an asset or liability frame. Business owners aren't trained in this stuff. They don't know it, and things we count as common, they don't understand. So it's really, really imperative that if you're in accountancy and you work with businesses, that you are dedicating yourself to training and teaching and simplifying the business owners on what's involved in fiscal management of the company. So KPIs are interesting because they basically show what's going on today. If you do historical looks at some of the elements, it might be anything from aging receivables or aging payables to seasonality, inventory variances. There's all kinds of things that the history can show. But the KPIs just show what's going on today. The history may show a trend as to how you got to today. So historical financial data is traditionally what accounting firms that deal in a little more advanced services look at. Good accounting software does a good job of showing the KPIs. Some of the more generic systems may or may not have those tools in them, but certainly the need for understanding and having available key performance indicators is really, really important. Okay, so this takes us to accounting software. I just wrote an article for XU Magazine, which is a globally distributed magazine for Xero users on 4 continents. And it basically talked about the impact that Xero had on the accounting industry globally as a cloud-based software company. Here's a little tiny New Zealand firm, got started up about 7 years ago, and all of a sudden, what's going on? They have expanded globally. And a lot of people thought, well, wow, they must be, one of the first, or, the actual foundation makers of what's going on in cloud-based technology. But what I showed in the article is, if you go back to 2011, I documented that there were 15 other cloud-based accounting software companies that were available in the States at a minimum. And so what made Xero different, or what made Xero unique? Obviously, the whole thing with Intuit, trying to expand what they're doing with QuickBooks Online has been interesting. I know recently we tried to do some conversions from QuickBooks Desktop to QuickBooks Online and found that that Intuit's own tools did not provide a seamless transition of the data. So this is pretty new stuff, and there are a lot of elements that are attached to it. Obviously, the second largest accounting software company in the US is Sage. Well, Sage has only recently started to create cloud-based technology, accounting software. I know in the UK they have, I wouldn't call it an extremely robust product, but it's a decent product. I think it's a little better than QuickBooks Online. But the way they talk to third-party developers like us was so challenged that Sage Corporate actually called me, and would my developers help them create the application protocol interfaces, the way that their software talks to third-party developers for the value-added feature stuff, which we have done. And, so there is no question that the accounting software you're using is going through incredible migrations. I know in reading online on my homepage today, there on iShade, there was some chat about, we've moved towards using Drake, does Drake make sense, and so on. Trust me, there are scores of accounting software out there. But what is interesting is what Xero has kicked off has been a massive race towards improving the sophistication and feature services of accounting software available through the cloud. And this is good for accountancy, because in the past, when you were using QuickBooks, the client, your business owner was doing QuickBooks on a desktop at his office. You really didn't have access to it. You had to get a copy of the file. Then they went into hosted shared services, which meant you logged in on the cloud, and QuickBooks Desktop was running on a cloud-based thing, and you could each access it, but the fees were very, very expensive. QuickBooks decided they didn't like that, so they created some tools on both the desktop and the cloud-based system to be able to have online access data that companies like Prophecy could use. There's this incredible migration that's taking place in accounting software, and it's happening so rapidly that I'm not sure that 2 or 3 years from now, most of us would even recognize what's going on with the accounting software. I will say that I think it's really, really important, not that you change the software you're using, but you start looking about as to who are the emerging companies doing these things and exactly what it is that's taking place on their feature sets and their benefits and so on. So, you know, if you're into larger business environments, I think one of the most robust ones is Twinfield. That's twinfield.com. They've been around since 2000. Very, very powerful system. They only distribute through accounting companies, but they're definitely for the mid, large, and larger organizations. Obviously, we all know, you know, about QuickBooks. It's kind of it's like white bread. Everybody buys it. But there are things that are emerging that are going to be making a huge impact, that if you're caught behind the curve, you'll find your business owners are saying, well, why can't I? And, you know, my buddy does, and he's on, and so on. The fact that there is this massive global approach towards this much more sophisticated cloud-based accounting software is going to impact you. So this is mostly an FYI. You need to be aware of the fact that it's happening. And as for me, I'm agnostic. We just want to support all of you, which means we want to support all the accounting software. But it's imperative that you don't let this sneak up on you and hit you. I think another critical thing that historical financial data provides is a value by a company's sector. When I think in terms of my business owners and they're working with me on business and tax strategies, I have three things that I want to make sure are always there. I want to make sure, first of all, that they're in a solid financial stable position right now. I don't want surprises. I don't want to run out of cash. It's the reason we do balance sheet forecasting. I want to make sure there's some financial stability in the organization. The second thing I want to do is I want to make sure that the company itself and the business owners, you know, use of running it is actually building the value by the company sector they're in. It's really imperative to understand that if everything remains the same in a business from year to year, that means it's dying. It's been a tough set of economic years because of regulatory and the environmental agency and so on. I'm sensing kind of a rattling in the states among the electorate that they're getting pretty frustrated with it. We'll see. The next presidential election is coming up a little more than a year from now, and I wouldn't be surprised to see a major shift in overall economic tax and regulatory policy coming up in the next administration. However, I do know that a company, especially if there are going to be shifts that happen on a national level economically, that they take 2 to 3 years to really hit the marketplace. You know, for those of us that were around in 1983 during Jimmy Carter's last, you know, gasp, and then when Ronald Reagan took over and made some major shifts in economic policy, it still took about 2.5 years for the velocity of money and all that to cycle into the marketplace. And then it was hallelujah good times, and then lasted all the way through Bill Clinton's presidency. So it's really, really important to me that I'm not only looking at how can I improve the value of the company, but most importantly, how I can help them with the succession plan in the company. I'm currently helping a medical company, a healthcare company. It's a very specialized form. It's a closely held corporation from about 30 physicians. And when they formed it, which was about 18, 20 years ago, the original founders, there are 8 of them, basically said, we want this to be fair. So any doctor that we bring on board, they're going to get a parity equal share with all the other doctors. And because it's a closely held company, every year and quarterly we're going to pay dividends so that we make this fair. If you're here for a certain number of years, then you're fully vested, you get the shares, and we equally share all the dividends between all of us, which was really fine. However, they forgot to talk about an exit strategy. So why? Because they thought, well, we've been paying dividends all along, so when you retire, it's goodbye, and here's $5,000, and we don't even give you the gold watch, and we hope you've had a wonderful time, you made a lot of money, have a great retirement. Well, what they found was that some of the people who were coming close to retirement, and with the squeezing that's occurring because of the impact of the pricing of services from Obamacare, that there were some that were close to retirement that were getting very squirrely because they didn't like this and they wanted to sell the practice. So, the board voted in bringing in a broker for doing a valuation on the company. And the valuation on the company was interesting because, and I really want you to listen carefully to this because this is the kind of help your clients really need. They brought in the valuation of the company, which was doing about $40 million a year in revenue, at about 92 to 94 million. And they told them who the buyers were and what this would represent. And essentially here was the net. The broker told them that by the sale price, that they would completely give up ownership, that each of the people who had shares would take home about 2.4 million, and then you become employees of the new company. But oh, by the way, your wages would go down about 200,000 a year. But trust the agent. The agent said that the true break-even point of this is 14, 15 years. Well, I was asked to sit in on this presentation by the board, and of course I had to wait till the broker was done, and it was all I could do to stop not shouting out, liar, liar, pants on fire. Because in reality, what had happened? The actual capital gains tax and other taxes they were going to face on the sellout were going to leave them with about 1.2 million, maybe 1.3. And when your wages go down 200,000 a year, that means in 6, maybe 7 years, you basically have wiped out that entire principal value. And you're essentially then operating a loss. So if you're planning on being there more than 12 years, selling the company meant you lost close to, well, $1 million. And of course, the people who wanted to leave refused to believe this was true, and they're all screaming and shouting, and they have to take it to a vote. And I'm meeting with the president of the I'm meeting with the president of the association, who's also one of the shareholders, a doctor, and the law firm with them on Monday to discuss why this really isn't the right way to go and what do the bylaws say they have to do it. So the point of all of this was that why did this problem come about? Because it was a best of intentions by the original founders who wanted to be fair. And there was no understanding that the company itself, even though it might have been distributing every penny of its profitability through dividends, they assumed that the company had no more value. Well, if that was the case, then there wouldn't have been an offer for purchasing it at 2x revenue. So, I was brought in a few months ago to try and help them through this. But the point is, this whole concept of succession is absolutely critical to your business owners. And we're basically having to bring in, an outside accounting firm for, validating the rate of return. We're using a very sophisticated estate and financial planning associate group that also does legal work. So we're giving them, 3 different look-sees as to what really the turnaround is and what the implications are. But mostly I'm trying to work with them so that those that are about to retire don't walk away with nothing. And yet this doesn't have a bad financial impact on the company. What I'm telling you is not uncommon. You really, really need to put a focus on the three things: financial stability, secondly, a focus on raising the value of the company, and thirdly, a focus on succession. Because those are the things that the individuals that own those companies that count on you for accounting work are looking for. So, there's some huge trends that are occurring right now, and I've talked about this if you've been on any of the last couple of presentations I've given. There's a huge change that's occurring in the Big Four, and by that, obviously, Ernst & Young, Deloitte, KPMG, and PwC. So what has happened? Well, the first is that in the United Kingdom and in Australia and in New Zealand, there has been a determination by all of the Big Four that they're just having their market share and their revenues squeezed really tightly by their traditional client base. When I was meeting with some of the people at one of the Big Four, they were telling me that by the time they went through the cost of capturing a project with a larger company, that if they won the account, it was like 14 months before the margin made up the cost of the sale. And that the businesses, the clients, were getting much smarter at playing them off one another. Well, KPMG, and that's very, very interesting, but Deloitte was able to, and now we like working with you, but what can you do? And all of a sudden they're seeing something that they hadn't seen before, and that is that the large corporations are getting much more sophisticated on their leverage and buying power for all the advanced services that the Big Four offer. So what has occurred is in the UK, initially KPMG, and now Deloitte and Price Waterhouse have all started this migration towards trying to help the SME marketplace. I haven't met with anyone yet at Ernst. However, I'm back there in a month, and I'm going to be meeting one of the managing partners at Ernst & Young in London to see what they're doing. So, why are they interested in us? Well, because the Prophecy tools have all the stuff that they were building in spreadsheets that now is completely automated, but more importantly, it's also fully integrated with the accounting software. So it's actually beyond what they were able to do in the big corporations. Why were they going after the SME marketplace? Well, I mean, it's just dollars and cents. The first thing that is apparent is if you go over to the UK, 99% of the businesses in the UK are in the SME market space. Secondly, the traditional accounting firms there are not doing a particularly good job of providing value-added services. And do I think the Big Four know how to provide these services to the SME marketplace effectively? Not yet. But I do know they all have deep pockets, and they have created, for sure, Price Waterhouse and Deloitte and KPMG have created whole dedicated P&L centers that they've capitalized to going after this marketplace. As I was leaving London, I had a call from someone that we know that I found out that over there, Grant Thornton has gotten funding and a partnership with RBC to the tune of $19 million to develop software for providing these type of value-added services. And of course, Price Waterhouse thought they could build it themselves as well. I got news for them. It takes a whole lot more than just money to be an effective software company. I mean, we've been at it 7 years. We've got several million lines of code. It'll be interesting to watch what's happening. But this is a significant change in the Big Four. This morning, we just got done doing a demo to Deloitte in the UK, who met with the person who is the managing director of their new profit center for going after it. They looked at our tools, and they're actually integrating our tools into the initial trials that they're running next month as being a primary value-added benefit because they saw the efficiency that was created on the types of services they were used to providing and want to be able to provide to the SME marketplace. Don't think this is not significant. It's massively significant. Both because we've been working with KPMG for a few months, and we're just recently beginning to start working with Deloitte. They're introducing this to their people in Australia when I'm over there next month, because they would like to see us integrated with them in Australia. The fact that the big four are going after the SME marketplace, do not for a minute believe that isn't going to happen in the U.S. It's almost like this is the the trial balloon. They're going to work out what works, what's effective, where the pricing is, what does the market say the service needs are, how do we approach them, how do we build a brand ID. If you're just sitting there waiting to see when it happens, you'll be dead by the time it arrives here. It's imperative that you understand that this is a major significant shift in what's going on in accountancy. I was chatting a little earlier today with iShade, and I was saying, I wrote this article about this stuff, and I said, if you look back to 1970, the idea of the doors that automatically open when you get close to them, pushing a little button on a device that you can wear on your lapel to chat to somebody who's miles away, the ability to tap on a screen and have a video conference with someone who is across the world seemed like absolute sci-fi writers doing Star Trek. Those are things that are common today. They've shifted how the entire business world and business industry has changed. And what I hope you get through to today is to understand that how the use of cloud-based technology, the incredible impact that Xero has had on changing the services side of this, because people who are Xero partners, when they buy onto Xero, they're doing it because they're buying onto having value-added services through the accounting software. They're not buying onto it like you would with QuickBooks or Sage, which is, well, we're there to do accounting and bookkeeping. So they've made a significant impact in the world. Again, they're not the only ones. There are lots of them, but they are the ones that have created the catalyst to this shift. And it is impacted so profoundly that the big four, for example, in Australia, Deloitte is using Xero as a white-labeled way of doing accounting and services. In the UK, KPMG is using Xero as a white-labeled way of doing it. In the UK, Deloitte is working with Sage on their new product set to provide that as the value-added service provider. But until that's in place, they are utilizing QuickBooks. So this is, you might not have believed this if I told it to you 2 years ago, but this is exactly what's going on today. The changes in the big four have a lot more impact than just on them. They're going to impact all of you. What is the big difference? It's forward thinking. It's going to, okay, I can run the KPIs, I can run the analytics, I can help show how valuation is changing. I can do that through comparatives, I can do it through any rate, there's all kinds of ways of getting the data that you need to show where they're at and what progress they're making. But trust me, when a big four comes in to help a company, that's really trying to drive them towards the future, which is how do we increase valuation? How do we build a succession plan? How do we make ourselves the partner that you can't think of running your business without, because we're much more cost-effective and valuable to you in a very strategic way. So this is a very, very definitive trend change. And what is it really based on? Fiscal management is not tax and audit. Fiscal management is how do we look at the capital, the resources, the trending, the actual cash availability, the market situations. How do we know what to spend, why to spend, and how to spend? The traditional way of thinking, just squeezing down expenses to create margin, doesn't work anymore. The whole idea of what's going on in efficiency, the things like Six Sigma, are based on the idea of reducing errors and improving workflow to the point where you're not exceeding capacity. always being lean and mean is not always the right solution. Sometimes it's hiring the additional people that frees up the bottlenecks, that increases the cash flow, that improves the rate of return, that generates the value proposition. And these are things that the accounting industry is going to be forced to learn, because those that don't are going to be left in the dust by the Big Four, by people like Crowe Horwath in Australia, Grant Thornton. I know, for example, McGladrey. McGladrey is trying to move towards doing more of this. I'm not sure if they're going after SMEs or just the mids to mid-large, but you know, we touch base enough in the industry to know that this is absolutely a trend that's taking place. So what's the big challenge? I think for most accountants, the big challenge is educating yourself on what this means and how to do it. Yeah, I remember when I first went out, and I was in my early 30s, and I was being invited into Fortune 70 and larger corporations. And I'm in a room with the president of the division and their 5 or 6 directs, and the next youngest guy in the room after me is 18 years older than me. The rest are 20, 25 years older than me. I'm going, oh my God, what am I doing here? And what I discovered was that the things that I had learned to do because of the use of the technology, particularly spreadsheets, advanced forecasting analytics through Boolean algebra, logic sequencing, set theory stuff, computer programming, I thought that the big guys had people that knew how to do this. Silly me, I found out that they didn't, and that the traditional way of doing it was not going to cut it anymore. And that's how my consulting work into the multinationals took off in 1983. So, you know, there's a critical side of this that you have to focus on educating yourself. Now, on Prophecy.com, we have a whole section called Prophecy University. There's all kinds of blogs and video training and ways of helping the accounting industry get educated on how this are doing. Now, obviously, I'd love you to use our products, but even if you don't use our products, at least go to the Education Center so that you can, if you're not as familiar with what these things are, you get free access to stuff. We have invested about 30% of our time and resources to continuing ed into the educational system, and that's across 3 continents right now. So I think it's really important that you look towards how can you educate yourself to moving towards providing these value-added services. Now, ultimately, when you've gotten yourself a little smarter along the way, you need to educate your clients. Accountants, you know, we have a language all our own, and we say things, and the business owner, we think, of course, knows it because it's very simple. We understand it ourselves. That's just like me thinking when I went into the multinationals, of course they understood why I was building these forecasting risk analytic projections, because I mean, they're CFOs. I mean, these guys they're analysts. They know what they're doing. They didn't. It's imperative that you understand that once you've educated yourself, the real value-added proposition you're trying to get to your clients is educating them. And that has to start in a very simple way. They don't know what KPI means. They don't know what balance sheet forecasting is. They don't understand that if a balance sheet forecast says in next February you're upside down $80,000, that's it. That is all of your liquidity. You have to fix that now. You don't have a way around doing it. So it's just imperative that when you're trying to adjust to these changes that are being inflicted on you, that you both educate yourself and you educate your clients. So what are the things that are impacting it the most? Cloud technology. If you're not moving your systems towards cloud technology, and you're still on, you know, desktop and those types of remote server things, 2 years from now, 3 years from now, you're going to be left in the dust. The cloud technology features are expanding so rapidly that it's imperative you get yourself familiar with how cloud technology is working in the industry. It's been interesting for us because, you know, we've been, Prophecy's been around since 2008. Its original founding date was fourth quarter of 2008, and it took us a year and some to get, you know, the product set out there. But one of the things we kept hearing was, oh, well, that, you know, that's That's really nice, but can it and can it? And we eventually figured out a lot of our clients were saying, how can I create value? In other words, what can your product do for me that the client gets a big wow that I don't have to do any work on? I know that sounds strange, but we just had to come to terms with the fact that even people in the big four were saying, this is great. And what it told me was, though they did know how to use the more advanced features of scenario building and risk mitigation and some other things that we do, it told me that there weren't really a lot of people within the big four that knew how to do it, that there might be a team that went to a multinational and maybe 1 out of 12 knew how to do it, and they were the kind of the managing principal, but the rest didn't. So what they were basically saying is, how do we create value without having us have to retrain our entire organization and sell it, and then, how do we build it up? So what they were saying is, what have you got for me that I can create a big wow with the client and not have to do any work? So we spent the last year and some, building feature sets that provide that. You can do the same. You have to look at what types of things you can get through advanced features on accounting systems, value-added stuff like us, Receipt Bank. There's lots of neat tools out there that you can provide incredible value added that you're billing for that really takes no effort on your part. I think it's very important to start with the baby steps, the steps that have value without effort, in order to give yourself the time to not only learn the more value-added services, but to figure out which of your clients would benefit from them, which won't, what is the maximum level of services that any given client, based on who they are and the size of their company and the sector they're in, would benefit from. And because otherwise you're trying to provide services that don't have a long-term value for, that's a lose-lose. You want to make sure that you go through this learning process of how to do it. Now, I will tell you this, the big four don't know any more about that than you do. You'd have to have been doing the kind of stuff that I've done for years, where I could walk into the medical clinic and say, here's your problem. It was the best of intentions, and this was just a time bomb waiting to happen. Okay? So I think it's important that when you go into providing these kind of services, that you do it by starting with the baby steps. Okay? I think the most important element when you're providing services is building up the value proposition. I want to make sure that, if I'm billing a retainer to a business client for $200 a month, he's feeling like it's providing him $2,000 worth of value, but I know it's costing me $50 a month. Now, he doesn't need to know why it's only costing me $50. I just have to make sure that the value proposition to the client is high. I'm not saying we're lying about it, but a lot of the things that are being made available through the technology now used to take extremely highly paid people, whether they were CFOs who really knew what they were doing, or VP of finances who really knew what they were doing, or analysts who really know what they were doing. Notice I'm always adding to really know what they were doing. I haven't met a lot of those, but businesses pay a lot of money for that stuff. The idea of being able to provide a value-added service at a fraction of the cost that historically they're able to do it at, that's the position you want to be in. You really have to make sure that whatever deliverable you're offering really builds the value proposition with the client. I think kind of the highest part of this, the thing that becomes the next step challenge, is how do you create a really proactive strategic advice model? We certainly know that if a company has got some growth plans and you spend money to make money, that if they have profitability that's going to incur taxes before the end of the year, I'd rather they spent the growth money before the end of the year to minimize this year's tax basis so that we can build the revenue stream and the benefits early next year without having to cut our cash reserves because we try to minimize the taxable events, and then all of a sudden I have these additional expenses in growth the following year. That's proactive strategic advice. So look for tools that allow you to do that. Obviously, Prophecy was built on that whole premise, but there are a lot of different types of tools that can help you do that. So in general, you're going to start with kind of historical reporting because that's what they're used to seeing. And the idea is then to move to ways of providing proactive advice that has high value perception, high actual value, and does not require a huge amount of burden on your side. That's the reason we built an iPhone, iPad desk app thing, and it works in the Android world as well, that allows the owner to look at the things he's interested in, like where am I at? What is my cash position today? I want to pay myself this much. How much more revenue do I have to generate this month? What do I owe in taxes up to this? What's my true break even? If I sell 1,000 above my break even, how much margin do I get? The little things that they think about on a daily basis. I mean, we're handing it to them on the smart device with your logo on it. I want them looking at you and thinking of you, that you're the person that's providing the proactive strategic advice. And again, as I said, trust me, the Big Four are going to be doing this in spades over the next 2 years, and in no small measure. So obviously, to stay relevant, we've got to put our focus on building their future. The minute people get trapped into just looking at what is or what was before, it's a bad circumstance. I don't know if any of you watched the interviews John Kasich ran yesterday in his speech on running for the presidency, but it was very inspiring because he said we have to focus on building a future for all the people, for the poor, for those that are suffering, for those that are having the problems, and the policies that are currently being done are not doing that. So it was very, very interesting because, I mean, he was talking on about things that I wanted to share with you guys today. I thought, oh, this is very interesting. He's got an understanding that we have to build the future in our value-added services. And in effect, even though he's talking about it as a political candidate, we're talking about it, he's also talking about the economic impact on the United States. And you know what? That's 100% consistent with what I'm talking about to you guys. We need to help businesses build the economy. We do that by staying relevant to building their futures. I think it's imperative that you spend time strengthening client relationships. Historically, most accountants touch their clients, I joke about this, 3 times a year. Once to do their personal taxes, once to do their business taxes, and once to take them out golfing in the summer. Well, that's not going to fly anymore because, whether it's through things like what Prophecy is doing or whether it's things that Price Waterhouse is doing or Gladry is doing, they're having ways of touching their clients on a daily basis. So, the KPMG logo is right in front of their face, and they understand what the value proposition is. You have to look at ways in a very, very cost-effective, non-abrasive way to strengthen the client relationship with touches, with value-added things, with automated reporting. There's lots of things you can do for strengthening the client relationships. I think it's imperative that you expand your services. Again, if you're going through still this educational process, then start small and, test your client marketplace. Try to expand some simple services as you feel comfortable in them and as you understand what the value proposition is, especially the value proposition, because it's much, much easier to get your clients involved in a value proposition if you really believe in it, and it becomes easy for them to see as you move along. So finally, it's imperative that you look for tools that work for you. Like I said, our Prophecy has been able to grow globally because we have built tools that our users find work for them. But I also know that it's imperative that the industry itself starts to learn how to create these better value-added services, that it starts in small ways and that you systematically determine and discover what optimally can benefit your business clients. And if that means your teeny tiny companies are just able to utilize some simple automated reporting and little tracking tools which tells them, where they're at and can they afford to pay themselves and how much margin they make, that's wonderful. That's something they didn't have access to before. So that might only be, $100 of services a month. But you will have other companies that are farther along on the curve, whether they're moving towards uh, succession plans, whether they're looking towards expansion, whether they're looking towards taking advantage of the failure of a competitor. There's all kinds of things that happen. Life is very dynamic. And I think the days of the sleepy accounting practice that just does fine on tax and audit are going to be getting a very rude awakening over the next 2 to 3 years. Again, mostly what I'm hoping is that as you're watching what's going on, that you are not just proactive for your clients, but you're proactive for your own practices, and that you're trying ways of expanding your services. Because if you do not look at what's going on in the cloud, if you do not look at what's going on in the accounting software through the cloud, if you do not look at what's going on from the value-added app developers, if you do not look at what's going on with people like KPMG, DT, on and on and on, you're going to wake up one morning and go, oh my God, what am I going to do? It's not a question of if it's going to happen. It's already begun to happen. There's still time. I think the big guys are not far enough along to completely know what they're doing yet, but they have deep pockets, they've got long resources, and they're in it for the long haul. Essentially, the NFL has decided to come in and play sandlot football. You better be ready for them. Anyhow, it's been just a delight to share these things with you. Obviously, when I get back from Australia and then I have another trip to the UK, I'm going to have a whole lot more information. I'm not sure when I'm scheduled next, but I look forward to continuing to seeing if there's ways that we can help your practices. And you've just been a delightful audience. So at this point, I think I'm going to turn it back to our hostess here at iShade, and we'll start ready for the next session. So,
Thank you, Peter. Great insights today. So let's go ahead and move on over to our online Ask the Expert session. I'm going to go ahead and get us set up over here.
have you taken the screen back yet?
Do you see? No, showing my screen now, so we're good.
Good, okay.
All right, so I'm going to go ahead and show you how to log on. So all you're going to do is you're going to go to iShade.com and you're going to log in the upper right-hand corner. I'm already logged in here. So then once you're logged in, you're going to click on Ask the Expert. And then once we get into there, let's go ahead and click on Join Now. You have to excuse the delay. It sometimes gets a little slower when I'm on the GoToWebinar. And then on this page, you'll just scroll down here and you can ask all of your questions in this little blank right there. Thank you all for joining iShade today. Keep an eye out on our Ask the Expert page for a full listing of webinars.